Friday's rally extends to Monday. Benchmark scaled fresh highs for a second day. Sensex starts the week above 73,000 and the Nifty soars about 22,000. Broader markets remain firm, mid-cap and small caps in the green. Meanwhile, Nifty IT skyrockets, followed by oil and gas and pharma. On the other side, media underperforms. RIL and tech majors spearhead Nifty rally as markets is pricing in softer US macros and Fed rate cuts. Meanwhile, earnings candidate Wipro and HCL Technologies soar post Q3. Tata Consumer announces two acquisitions. Capital Foods and Organic India will be bought for 5,100 crores and 1,900 crores respectively. The World Economic Forum kicks off today at Davos. Top political and corporate voices to attend the summit. Catch the coverage through the day on NDTV Profit. Hello and welcome. You're watching Large Trades. I am Agam Vakil, and in this show, we will take you through all the stocks which are buzzing in trade, largely on account of volumes, and perhaps if they have in fact seen bulk deals and block deals. For now, let's take a quick look at the markets, and they are, of course, advancing. Steady gains coming in for the markets on an intraday basis, even as the Nifty scales 22,000. And, well, the Bank Nifty, of course, is also the other key mover where we are looking at advances and now inching back towards the mark of 48,000 as we speak. In terms of the Nifty, let's take a look at all the contributors leading to this advance. And we certainly have heavyweights such as HDFC Bank and Reliance providing the bulk of the support. But let's not forget Infosys along with HCL Technologies also up and about and giving and contributing to that 200-point up move. And in the balance, we have 37 points lost, but that's largely on account of some weakness in HDFC Life and Bajaj FinTwins. Save for that, it's turning out to be a really good session as far as the Nifty is concerned. Yet another milestone achieved. And when it comes to the broader markets too, we are looking at gains. So let's talk about the mid-cap index, which has underperformed the benchmarks just by a tad a bit. But on the whole, it's certainly turning out to be a great day, even for those counters which do comprise of these indices. So if you do consider the constituents of some of these mid-cap indices, and take a look, we do have a lot of gains in the oil and gas space. We also have a whole lot of gains from several of these larger, broader market universes. But we'll move on and talk about Tata Consumer, where plans to acquire 100% stake in Capital Foods and Organic Foods at a combined enterprise value of around 7,000 crores. We have the founder of Capital Foods, Ajay Gupta, in a conversation with my colleague Sasha Sen. We'll come back to that conversation just a bit. But to take a check as far as Tata Consumer is concerned, do remember that it did open the day with substantial gains, and since then it has come off and it has been consolidating around these levels for now. But, Tata Consumers is one of those stocks which has actually defied and outperformed the FMCG index over the course of the past many months. Tata Consumer, of course, has also advanced on account of the several plans it has had. And while the FMCG sector has had its own set of challenges, Tata Consumer has, to a certain extent, outperformed the index. But I was talking to you about the conversation that my colleague Sasha Sen was having with the management of Capital Foods. This is a slice of that conversation. Listen in.
Why now? Every time is a good time. For us, one of our investors needed an exit, and hence we had to do something like this, really speaking. And we also believe we've created iconic brands in Ching's and Smith & Jones. With the help of the Tata distribution, the TCPL distribution, which is close to 10 times larger than us, we'll benefit from this entire integration that happens.
All right. So have you also sold your entire stake? So it's a complete exit for you?
No, we are holding between us. We are holding 25% of the equity, which will get exited over.
Yeah, that
over
is
the next
likely
3 years.
to be. Yeah, that is within the 3 years. For now, if I ask you about your personal capacity, are you holding? What is the kind of? Or how much stake are you holding back?
So I'm holding 5% in stake in the company.
All right. And what are the conditions for sale in 3 years? We believe that the 25% stake that you were talking about will be, gradually being acquired within 3 years. So what are the conditions for sale?
No, there are no conditions. We just we are going to handhold the business. We're going to work on the. I have spent 27 years in the business, and the Tatas are very gracious that they want to use our knowledge that we have done in the last 27 years on the culinary business specifically, and in the next 3 years' time we exit in the third year. So there are no conditions as such.
All right. And, I understand that you have built a very attractive business, and which is why a lot of other brands like Nestle, ITC were also among the companies in fray. So what were the hits and misses, and how do you actually get into the valuations and, how did you manage to strike a deal with TCPL at the current valuation?
So TCPL is happy with the valuation. We were happy with the valuation. There was an edge. That, like I said earlier, TCPL is Tata's, and it's a dream run for me to hand over the brand to somebody like the Tata Group. So that's really where it boiled down to.
All right, but the street, there are a section of analysts, and the street is also estimating that it is at a slightly premium value. So what is your take on this?
We believe it's a fair value. It's a 55% plus gross margin. We are most of our categories grow at between 15 and 20%. We believe we'll beat that in the coming years. So, and that's an analysis that's done between us and the Tatas. So I think it's going to be a great deal for TCPL going further.
Right, and you have been growing at a CAGR of 20%, you just mentioned, and also, but that was also because your profitability was weaker in the past. But what was the profitability as of FY24, and what is your outlook for FY23, and what is your outlook for FY24?
So we in the last few years we had an EBITDA of 20%. And with the synergies that will occur now with the integration with the Tatas, we believe it's only going to get better from here.
Okay, and in terms of revenue, is there an outlook that you would like to share?
I would leave that for Sunil to give you an outlook on.
Okay, and what was the revenue that you had clocked so far, like for the first half of FY24?
So we'll close this year at 870 crores.
870 crore. All right. And what was the amount of debt and cash on the books at the time of the deal?
We only have cash. We are a zero debt company. We are cash positive for the last many years. I don't have the exact figures, but we have zero debt on our books, and we are a 100% cash company.
All right. Okay, thank you so much, Mr. Ajay, for taking the time out, and it was a pleasure talking to you.
Thank you so much, ma'am. Thank you.
All right, that's the management of Capital Foods, while taking us through the change in shareholding as well as the fundamentals of the company in terms of what we can expect and where Tata Consumer can, in fact, take this ahead. But from there on, we shift our focus to the World Economic Forum, which kicks off at Davos, and we are committed to get you all the coverage from there. My colleague Neeraj Shah gets us the mood check at Davos and tells us what's lined up.
Day one of the World Economic Forum at Davos, and we at NDTV Profit have a packed day. Now understand, because we are 4.5 hours behind from India, so a lot of our conversations will happen post-market hours today. But who is in store, or rather what is in store today on NDTV Profit? We're talking to a large private equity investor, Manish Kejriwal of Kedara, amongst the largest private equity names, and the conversations with him around what is the interest that he's seeing in India at a point of time when he seems to be a bit cautious on valuations, I think will be very, very important. We talk to the senior lead of technology at McKinsey as well to try and understand what Noshir Kaka believes is in store from a technology perspective. Big tech is all powerful, but there are niche players coming in and making their presence felt in the AI field. So can that disrupt what's happening with big tech? I think that will be important. And as the snow is just starting to come down, let me quickly tell you what else is in store. We talked to Checkpoint, Dr. Dorit Dor. They are an $18 billion US listed company focusing on cybersecurity, and I think that will be the buzzword in addition to AI and cooperation at this year's WEF. So I think that will be an important conversation too. And finally, we talked to IKEA with their growth in India being so rapid. Huensio Maetsu of IKEA would be throwing light on IKEA's global growth ambitions, and more importantly, how are they seeing India within the growth landscape. So I think that will be an important conversation from a foreign company's interest into India. To wrap it up all, we speak to PwC's Bob Moritz as he speaks about how does he see the global interest in India, because they have clients all across the world. And last year, I remember Bob telling me that India seems to be at the center stage of every global corporation's attention. So it's a packed day right here on NDTV Profit and the NDTV network when it comes to the WEF at Davos. I hope you tune in for some of the conversations.
Right, Neeraj certainly has a very busy day up ahead with that long list of very interesting conversations, the first of which is going to be coming up for you at 2:30 p.m. today, and that's going to be Manish Kejriwal, and who is the founder and managing partner at Kedar Capital. Stay tuned to NDTV Profit, and we'll keep bringing you more. Welcome back to Large Trades, and now we put the spotlight on the big volume buzzers for today, starting off with MES Financial, which is up and about and on large volumes. Going to get in my colleague Varsha to tell us firstly about what's really happening today and also a little bit about what the company does. Varsha.
So hi Agam. So if you see, the stock is up over 8%. Now this is backed by volume. So volumes are at 10.8x at its 30-day average. Now let us see the business model for this company. So company is an NBFC registered with RBI, and if you see the product portfolio for this company, so they do give micro enterprise loans, which forms almost 47% of their portfolio, followed by SME loans at 36%, and they do have two-wheeler loans and commercial vehicle loans and salaried personal loans also. So this is basically the business model for this company.
Right, Varsha, but in the past, what has played in favor of the company? And secondly, if they have any targets with respect to changes in their segments going forward?
So if you see, Agam, so technically what's playing in their in favor is, one thing is they're expecting consolidated AUM of almost 10,000 crore by Q3 FY24. Now, interesting thing is that they had given this target that they'll be completing 10,000 crores of AUM by end of this financial year, but they'll be achieving this target earlier. Now, this is backed by Q3 being festive season. Also, if you see, they expect AUM growth of almost 20 to 25% in the medium term, with NIMs being around 7%. And if you see, they've grew their AUM by almost 25% CAGR in last 16 years. And also, if you see their targeted product mix over medium to long term, so they want to take their housing finance and wheels portfolio at 20 to 25% portfolio, while SME and MEL at 50 to 60%, followed by salaried personal loans, which will be capped at 10%. So this is their overall targeted product mix over the long term.
All right, Varsha, thank you so much for getting us that update on MES Financial. Should certainly be on your radar if you're an investor. But from there on, I want to take a look at the oil and gas space. As we've already mentioned, that is also at a lifetime high. That is the Nifty Oil and Gas Index. Contributing to that index naturally is the big cap company, that's Reliance Industries, which of course is in the petrochemical space as well. But even beyond that, we're seeing gains in ONGC to the tune of nearly 4%. Oil India up 3%. MRPL is the other curious one, which has really picked up steam of late, and it's also advancing by another 7% yet again after the kind of gains that we've already seen last Friday. What's playing out in favor as far as some of these names go? Well, we do have a note from S&P Global, and they suggest that the petrochemicals industry, that is the Asian petchem industry, it seems that it is about to turn a corner. What they're suggesting is that the sector is likely to head for a better 2024. Sure, the first half may be a challenging one, but there is a likely improvement which lays ahead as far as this particular year is concerned. They go ahead and say that they expect global utilization rates of ethylene to recover. Moreover, and consequently, they also expect spreads to slowly increase. And that, of course, will have a beneficial impact not only on revenues, but also on margins and hence the bottom line. Global firms have also likely overstated the capacity expansion, and what that means is that there could perhaps be a little bit of a problem when it comes to supply, and if there is lower supply and higher demand, that can also potentially lead to prices higher, and hence because of that, they're expecting most of the top-rated Asian petchem operators to navigate difficult situations. Now, they don't rule out the fact that it could in fact be yet another very challenging year, but even some of the best-placed companies would potentially be out of the muck in no time, and that perhaps is also one of the many reasons why S&P Global is positive on the sector, and potentially why we are seeing those gains as far as oil and gas companies are concerned. But from there on, we move on to yet another volume buzzer, and that's Excelia Solutions, another very interesting company coming on the radar of my colleague Anushi. So I'm going to get her in to talk to us about, firstly, the volumes profile. Anushi.
Right. So now if we look at Excelia, Solutions, it has been quiet in buzz, not just today, Agam. Even if you look at even Friday, the trading volumes were high with about 5.4 times its 30 average today. And on Friday, that it was about 6 times its 30-day average. So now coming back to today, the stock did hit an intraday high of about 9.8%, while in the last previous 5 sessions itself, it has showed about a 22% of gains. Meanwhile, in the 6 months, it has showed about a 35% of gain. So I just want to, what is driving the performance, let's just understand that. So the company is into providing financial, industrial and cargo solutions to the airline industry, with the financial solutions making up the most, about 82% of contribution comes from here, and they include services like revenue accounting, assurance and cost management. They also have tied up industry partnerships with airline industries like ATPCO and IATA. So they are trying to strengthen their hold in the industry as well. So that is there. And apart from that, the financial performance, if you look, let's just get the June data. Even June 21, if you see, the company had reported about 251 CR of revenue, but its revenue growth had taken a beating of about 30%. This was due to the COVID effect which had taken, but then there onwards it has been showing a 25% to 30% growth, and its EBIT margins are also quite strong, with about 27 to 34% improvement in its EBIT margins over the period. Do note that the company reports its annual reports in the end of June year, and the PAT growth was also about 71.4% growth in the June 22 period to about 53% growth in June 23. So this is the financial performance and business background.
Right. Absolutely. You must remember that 2020 was a blip year. 2021 was a blip year on account of COVID and the kind of complications that it had caused for not just this industry, but the entire industry. But what is really interesting is the profit growth over the course of the last few years. And June 23 also will ended with us on a strong note. But Anushi, if you could tell us a little more about the shareholding as well, and several other factors which potentially could give us a little more context here.
Right. So if you look at the key shareholders over here, the promoter and promoter group itself have a strong hold in this company with about 75% stake as of 30th September. Next, if we look at the DIIs and the FIIs, you don't see much of an attraction over here, with about mutual funds making up about 0% stake and FIs having just a minute 0.26% stake. But in the individual categories, we have Plutus Wealth Management, which holds about 6.7% stake. Now, again, coming back to the stock performance of today, the stock hitting an intraday high of about 9.3%. It was also on the back of the Nifty IT rally, which has took place in the last 2 sessions itself, with a strong Q3 numbers coming up. So even the company is coming up with its result update on 18th of January. So that should be something that we should be considering and factoring going ahead.
Earnings will be most important, and I reckon that the stock has been gaining strength to a certain extent, factoring in what we can expect. And the earnings, of course, will be this coming Thursday, 18th of January. So watch out for that one. Anushi, thank you so much for getting us that update on Axelia Solutions. And we move on. Meanwhile, on the sidelines of Pixel's facility launch at Bengaluru, my colleague Rishabh Bhatnagar caught up with ISRO Chairman S. Somnath, who spoke about the facility and the private space manufacturing in India. Here's what he had to say. Listen in.
See, with the opening up of the space sector in 2020 and also the release of the 2023 space policy, it enables non-governmental entities and private sector to come into space in all the sectors, building rockets to building satellites, applications, and create business and value in space sector. So today's inauguration of the Pixel's integration facility for satellites is an example of this growing interest in the domain of space in the private sector. Not only Pixel, there are many other companies who have started already the manufacturing of satellites in India. Pixel is not manufacturing, going to manufacture, they have already done it, they have launched it, they are operationalized satellites. But now they are looking at scaling up numbers and more number of satellites to build in Bangalore. I'm really happy to come over and then have part of this celebration of building their new facilities. And I hope that this will be flooded with building of the future constellation of satellites, especially smaller satellites, which they are specialized in, imaging satellites. The point which I said is that it has to create more value. It's not just building satellites. out of the satellite you get data, and this data must become finally a useful product in terms of delivering some services, goods to the people. And this aspect also, they are putting a lot of value and effort in terms of image processing, data dissemination, and making significant impact in the society. I think both these are there in Pixel, and I want to congratulate them for such an initiative.
So what do you see in terms of more collaboration between the government and private entities going ahead in terms of policy changes as well? And overall, what all has happened over the past 4 or 5 years?
See, the policies are very clear. The publicly funded facilities and infrastructure that has been created in space department is at the disposal of the private entrepreneurs for making use of them in case they need some support, especially the technology support, facility support, consultancy. All these are possible today with the governmental facilities. So that's already happening for Pixel. Some of the testings are happening in our facility. Some technology transfers are happening. And we will look at it to enhance it in the due course.
Well, moving on, my colleague Neeraj Shah also spoke to Jagdeshwar Gattu, who's the president of Digital Foundation Services at HCL Tech in Davos, about how the need for a more secure network among enterprises has gone up significantly. Listen in.
We see that the enterprises now putting a lot of effort on, investments in terms of security. What we used to see 2-3 years back, about 7 to 8% of the deal value. Now security actually almost becoming 20 to 25% of the deal value. There are standalone deals we are seeing in the security space, and there are standalone deals we're seeing in the network space, because it's almost like you're doing a catch-up game. You sort of went into a cloud journey. You went into the COVID because of the workplace endpoint security point of view. Then now you are trying to transform your network, transform your security.
And that is all that we have in this edition of Large Trades. But don't go anywhere. On the other side, we get you India Markets Close. Stay tuned in.